Hi guys, welcome to Mesting with JYK, and today I'll share some thoughts on Tesla. So Tesla released their earnings, and with that, their conference call, and a bunch of people had a bunch of opinions on it. Some of them are somewhat funny. So I'd like just to address some of the bull cases. So there's this channel called Financial Education. Some of you might know it, and then he basically lays out that uh, the four bear case that he kind of tries to debunk in a sense. He says that EV market share will increase and internal combustion engine won't be there forever, and competition will not drive out Tesla. So okay, so I don't know where the EV market share will be. Personally, I see efficiency gains in EV, but I also see how an average person don't really want to pamper their car, not necessarily pamper, but like to be paying attention to maintain their battery charge and all that stuff. So that's one thing, and then I don't know whether ice will be there forever. Um, it could drop, it could go up, and then EV market share is going up at the moment, but there's a lot of subsidies. Will that be there forever? I don't know. And competition, what I can say is that yeah, competition is at least taking out the S and X. Whether there will be competition that takes out the three, I don't know, but it doesn't make sense that competition does not take market share away with you. It always happens. So as even for a company like Amazon and cloud computing, right? Competition comes and then their market share actually goes down, even though the whole pie grows larger. In this case, I don't know if the pie is going to grow larger as because it is not that difficult for a traditional car company to make an EV. Granted, Teslas have their own strength. From my understanding, they have the best packaging in terms of the utilization of space. They have the best battery management software that deals with thousands of cells simultaneously, and they have the best engine. Well, not the engine, the motor that is both small, efficient, and light. So the holy grail, basically, right? So yeah, they have a bunch of good things about them, but that's just part of a car, and there are other things. For example, cars should not leak. They should be reliable, easy to repair, all that. Tesla is none of that. So I don't know. I think a competition will come and take out some of the Tesla's market share. They will not eliminate Tesla's demand, but they will make a dent in it. Self-driving, well, that's a common theme among the bulls. He's saying that self-driving, well, in here he's saying that bulls believe that self-driving will not be here. I don't think that's, sorry, bears. I don't think that's the case at all. It's just that both bears believe that Tesla are not ahead in self-driving. And if you look at any third-party studies in terms of actual self-driving mileages, Tesla is pretty far behind. And then he's saying that Tesla stock is at 55-week low, but that doesn't really make any difference. You say it's low now, it's lowest in 1 year, therefore not much downside. I'm like, Tesla has phenomenal downside in his way. He uses these big words all the time. So this company has a book value of what, 20 something, and a bunch of debt. So Always remember, on a balance sheet, your asset may not be real, but your liability almost always is. In terms of Tesla, their asset is made up of a lot of things, such as improvements to their leased stores, their inventory, and then receivables. They had a $1 billion receivable somehow for a consumer-facing business, which I can't quite fathom, but whatever. They got the receivables, and they got the PPEs, the other PPEs, which you can never sell at full value. It just does not happen. Generally, PPE goes essentially to zero when you try to liquidate a business. So yeah, their floor is really below book value. I would say probably zero, if the company actually goes into liquidation. For the equity part, I'm not saying the enterprise is worth nothing. The debt is certainly worth something. Whether it's worth 100 cents on the dollar, I don't know, but the debt is worth something. The brand is valuable, and their know-how is valuable. So these are all valuable, but whether that value lies in the equity part, whether that value extends up to the equity part of the capital structure is doubtful, though. So that's one thing. And then the other thing that is funny is here. I mean, this is taken out of context. He's now doubting whether this is a growth engine, but this graph still looks funny. A new growth engine that goes down in revenue. Okay. And then the other thing that people talk about is the Tesla insurance business. I was like, okay, so this this is the worst business for Tesla to be in. So for something, if you think about an insurance company, if you look at any insurance company, in fact, right, you can look at let's say Progressive. Right, Geico is no longer, come on, Progressive. So that's a casualty insurance. Sorry, I think it's a property insurance, yeah. And auto insurance, real estate. So that's basically that. And their PB trades at what? I think close to 1 usually, these things. Where's the PB? Oh, this one actually trades at 3. All right, 3. Tesla trades at 10, 15, something like that. And then if you look at, say, Allstate. Oh, come on. Allstate. They are at what? 1.6, right? So PME is a reflection of capital efficiency. If you think about the market as somewhat efficient, then PB indicates how the higher the PB, the less asset intensive is the business. Think of Facebook. They can grow revenue without putting in any additional capital. And insurance is the opposite. You need by law, you need a certain amount of capital in order for you to provide insurance. And Tesla has a horrible balance sheet, so how the hell are they going to do insurance? And also, even if they did do an insurance, that's actually a value destroying thing. Yeah, they do have the advantage of knowing more about how their cars are being driven. So yes, they can price the policies more effectively in theory, and probably in practice as well. But it again is weird, because you buy a Tesla a lot of times for the thrill of 0 to 60 under 5, 3, whatever. And now you're saying if you do use that feature, I'm going to charge you more in terms of insurance. Like, it's just weird. And also, it's insurance is just not a very capital efficient industry because because of the competitiveness. Because I can go out and buy any insurance policy, and I'll probably shop for the lowest one, right, with the lowest rate. And even if I may not be sensitive to $100 a year in terms of price difference, but if that difference goes to $300 or $400, I'm sure I will switch, and I'll find out. I'll probably check like every 2-3 years and then find the lowest bid. So this Jeremy guy, he says, "Oh, the insurance is a fantastic business, and Tesla's gonna get in it and print a lot of money." And he even said that Warren Buffett is also got rich on insurance. But like, that's two completely different things. Warren Buffett got rich, yes. Through insurance, yes. Over what period of time? 50 years. He bought National Indemnity in the I think it's National Indemnity was the 50s or something. He bought it after he purchased Berkshire, and then he bought National Indemnity. That's his foray into insurance, and now it's 2020. So it's been like 50 years since he did that, and then he did grow his wealth a lot using that. But the reason he made money is not because insurance business is a good business. Insurance, and even he admitted, he said insurance business is a really difficult business. You need a very good managers, and they have to be constantly doing the rational thing, i.e. not writing policies when the price does not fully compensate you for the risk that you take. And across time, you've seen multiple bankruptcies of insurance companies, and and then they are by definition just more leveraged than usual, and in order to take advantage of market opportunities, you need cash in hand. You need to be able and willing to write policies when others are not, especially in a business like reinsurance. That's what Buffett was doing. But anyways, insurance is not an easy business. If that was an easy business, there will be a lot of insurance company upstarts. There are not, because it's not easy. It's a tough business. And if you're familiar with insurance business, there's a metric called what do you call this thing? Something ratio, combined ratio. Yeah, so that's essentially your claim cost plus the servicing cost, and as a percentage of the premium that you receive. So if you can keep that under 100%, that means you always make an underwriting profit. You are on the right track, and not all insurance companies can do that. A lot of times they don't. So anyways, I just think that a lot of the bull case are just, they can't withstand a deeper look. So in summary, we've got Tesla demand is unlimited. It will not be hindered by competition. Well, I think that's false. Tesla is ahead in self-driving and will take over self-driving in terms of robo-taxi. I think that's unlikely to happen. They do have some advantages, but I think they're still laggard. Tesla is already 52-week low. Well, what about 10-year low? They were what? 10 years ago they were something like $10. So what about that? And then this one obviously is like, well, yeah, they have multiple growth engines like energy and solar. Well, none of them took off. They will do insurance. Insurance is a horrible business. The Tesla make 20%. If you think about it, Tesla makes 20% of gross margin, and they can probably turn their inventory, I don't know, 5-6 times a year if they're efficient. An insurance company, not so much. You can get a combined ratio of 95 is considered as pretty good. So you get a 5% margin. So good luck. So yeah, that's all I have. It's not too detailed. Mostly just thoughts on Tesla. Oh, and one thing I would like to show you. There's a thing called Now You Know. Right, and then they talk about something like shorts making big calls or something. So there's a father and son show, and I'm just like, okay, if my counterpart is dumb as that, it's very difficult to lose money. I mean, they are.
My mission is.
Whatever. Okay, so let's find it. So that was somewhere around the 35, a live stream of something. Yeah, so they had a live. Oh yeah, this guy. So let me find it. Somewhere around. Oops. Go away, Netflix. Somewhere around here. Let's see what they said. Oh yeah. Here we go. Oh my God, I'm just. We can look at this. He said something about. Well, you guys can check this out, but essentially, I'll put a link to the second. Essentially, they said something like after the $35,000 Model 3 reveal, they said, this is all very bullish, extremely nice. On the same announcement, Tesla also said they're gonna close down all the physical stores, and then they see the stock price dropping. They're like, oh, these are big shorts making big calls. And then later they said something like, oh yeah, these are big oil taking, big oil shorting Tesla. I'm like, what? So if that's the understanding of that's the level of understanding a Tesla bull with lots of audience has of a capital market, then my chance of winning this bet just went up. Like, my counterparty is literally ignorant of what's going on. So yeah. So I'm just watching Tesla nowadays as a soap opera. It's so funny. There was a Chinese company that posted. They bought the screen on Times Square, and they basically said, Tesla, give us back some money because your cars are constantly broken and we can't get it serviced in time. So that, and then they explode. So yeah. All right, that's all for today. See you next time.